Hello, and welcome to Arnerich Massena's first quarter 2021 MarketCast. We hope this message finds you healthy and starting the year off well, seeing signs of life getting back to some semblance of normal, reconnecting with family, re-engaging with old friends, and perhaps seeing colleagues for the first time in over a year. The more time that passes since the inception of the pandemic, the more we can see how wide-ranging the impact has been on our society. It seems like everything is being transformed, from our schools and workplaces to our homes, lifestyles, and culture. It's been a difficult transformation. But together as a nation, we've been resolute and steadfast and made a lot of progress towards meeting this challenge. And the same has been true for us as investors. When we look back at the past year's market performance, I think we can see that those who have taken a steadfast and disciplined approach during this challenging period have been well rewarded. Let's take a look. Here, we can see that stocks have had solid gains so far this year as the economy has continued to improve. Small cap stocks led the way, rising more than 12%, followed by large cap, international, and emerging markets. But it's when we look back over the past year that results have become truly remarkable. Since last April, effectively the market bottom, stocks have returned 50, 60, or in the case of small cap stocks, over 90%, their best performance in over 40 years. However, there's been a downside. With growth picking back up, interest rates have been moving higher. Bond prices declined during the first quarter, and bond returns have been roughly flat over the past year. Now, looking more closely at small cap stocks, we can see that this current recovery beginning last July has been very powerful, with small caps outperforming large caps by more than 40%. This ongoing rotation from large to small cap during a recovery is something that's happened many times before and something that we anticipated and highlighted a year ago. And while we don't know how long this rotation will last, history has shown that changes in market leadership, once established, can often last for years. So what could be driving this rotation? While there are many catalysts for the surge in small cap, perhaps the biggest one was the sheer magnitude of the economic rebound that we're going through. After contracting by 3.5% last year, the U.S. economy is projected to grow by 5.7% in 2021, a massive turnaround. President Biden recently signed a $1.9 trillion economic stimulus bill and is proposing an additional $2.3 trillion multi-year infrastructure plan, and forecasters have not only begun raising their 2021 growth projections, but also their inflation expectations. This has created a tailwind for small companies, which tend to be sensitive to fluctuations in growth and inflation. But as you might imagine, the sudden rebound hasn't just affected stocks, it's been affecting bonds as well. This chart illustrates the difference between long-term and short-term interest rates over time. We can see the yield difference or term premium has been rising sharply over the past year as the 10-year Treasury yield has climbed, while the 2-year Treasury yield has held steady. We interpret this steepening of the yield curve to mean that bond investors are expecting economic growth and inflation to increase over time. And in fact, at the end of March, inflation expectations for the next decade had risen to an 8-year high of 2.4%. This raises the question, how might investments perform if bond investors are right and inflation does move higher? To answer that question, I'd like to introduce David Janec, Senior Investment Advisor, who will share our latest thinking.
Thank you, Brian. In this table, we're going to look at investment returns net of inflation during different inflation scenarios. After inflation returns have historically varied quite a bit by asset class across these different scenarios. For example, fixed income indexes traditionally perform well during periods of falling inflation, and on the other hand, hedge funds, commodities, and emerging market stocks are typically at their best when inflation is high or rising. Among these asset classes, we think that emerging market stocks are particularly interesting right now. What we like about emerging markets is that they're so diverse and dynamic. For example, we can see here that while emerging economies continue to offer some exposure to energy and materials and other old economy sectors, they've also been rapidly evolving to consumer and technology-focused new economy sectors. And yet, despite their shift to these high-growth sectors, relative to developed markets, emerging markets continue to trade at a discount to their long-term averages. Finally, many of these emerging nations have had swift and effective pandemic responses that have boosted their growth prospects relative to developed markets. We expect emerging market equities to be a key driver for portfolio growth in the years to come. So, what does this mean for our portfolio strategy? Well, we continue to think that we're in a period of accelerating growth that's going to be a headwind for traditional fixed income investments. So, instead, we continue to emphasize hedge and diversifying investments where appropriate. And while we do continue to hold bonds for liquidity and for rebalancing purposes, we are looking to limit duration and credit risk moving forward. On the growth side, among equities, which are typically the main driver of portfolio performance, we've been holding our positioning view steady because we expect market conditions to continue to be well aligned with small caps, international, and emerging markets, areas we expect to continue to benefit from the recovery we see unfolding. We'll continue bringing you new investment ideas in the months to come, and your advisor will work closely with you on specific opportunities as they become available. In the meantime, please join us for our upcoming webinar on April 29th, Post-Pandemic, What Does the Future Hold? We're very excited to be hosting this live presentation with special guest Dr. Po Tu, an infectious disease expert from the Everett Clinic, who's been on the front lines of the pandemic since the beginning. Co-CEO and Chief Investment Officer Bryan Shipley will lead a discussion about what we can expect as we recover both our health and our economy, and attendees will have an opportunity to ask questions. You should be receiving an email invitation with a registration link, and we're looking forward to seeing you there. Thank you so much for joining us today, and have a great rest of your day.